Welcome back to the One Time Close Construction Loan channel. I'm Jake, your construction loan expert, and have been doing these loans for nearly 20 years. If you are thinking about building a custom home, there is one thing I want you to know right up front. The loan can be smooth, it really can, but only if you work with us to set it up the right way from the start. A one-time close construction loan is built to make life easier, not harder. It combines the construction phase and the permanent mortgage into one loan, one approval, and one closing. Today, I've invited Linda, one of our recent clients, to the show.
Thanks, Jake, on the one-time close. That is what caught my attention. I did not want two closings. I did not want to juggle a bunch of paperwork twice. I just wanted a clear path from dirt to driveway.
And that is exactly the right mindset. People get excited about the house, and they should. But the loan file has to be clean before the build starts. Most delays do not happen because the dream is bad. They happen because the file has holes in it. That is the whole game right there.
I remember feeling like I had to learn a new language. Builder approval, draw schedule, plans and specs, interest reserve, appraisal, contingency reserve. It sounded like a lot.
It is a lot, but it does not have to be confusing. The main thing is to avoid the 5 mistakes that slow these loans down. And those mistakes are the same whether the loan is conventional, FHA, or VA.
That part surprised me. I thought the loan type would change everything.
The program rules are different, sure, but the big trouble spots are often the same. The builder has to be right, the budget has to be real, the plans have to match the build, the draw process has to be understood, and the borrower has to keep things stable after pre-approval.
That last one is huge. I did not realize how easy it is to mess up a good file by changing something small.
Exactly. Let us start with the first big mistake. A lot of people think any builder will do. That is not true. Many one-time close construction loans require a licensed, insured builder who meets our lender guidelines. In VA files, the builder registration piece matters even more because the loan process includes VA eligibility, entitlement, appraisal, and project review steps.
So if the builder is not approved, everything stops?
Pretty much, cold in its tracks. We, the lender, cannot move forward with a builder who is not approved or insured. That is why the builder should be one of the first things you lock down, not the last. Not after you fall in love with the floor plan. First.
That makes sense. I used to think lot first, then builder, then lender pre-qualification.
A lot of folks do it backward. They find land, get excited, then realize the home plan does not fit the lot, or the builder is not approved or does not want to bother to get insurance. That wastes time. It can also waste money. The smarter way is lender pre-qualification, builder, land, then final plans.
That order saved me from a headache. I almost tried buying that land that would not have closed until the construction loan was ready to close, and that would have been wrong for the house I wanted.
And that is why we say slow down before you speed up.
Simple stuff, but it matters.
It really does. And if you want to know whether your builder fits the loan, call 888-857-8041 before you get too far down the road.
This was the eye-opener for me. I thought the budget was mostly the house build price.
That is one of the most common mistakes. The real budget is bigger than the house price. You need the land, site work, permits, utility runs, grading, labor, materials, interest reserve, closing costs, and a contingency reserve. If you leave those out, the file can look weak even if the home itself is solid.
I learned fast that dirt is not free.
Nope, and neither is moving it. Construction costs can change quickly, so a tight budget can turn into a problem if it does not leave room for real-world issues. We, the lender, want to see a complete picture, not a hopeful guess.
That sounds fair when you say it that way.
It is fair. And smart. A one-time close loan is meant to create stability, not uncertainty. If the budget is too thin, we, the lender, may worry the build will stall later and deny the loan.
So what should people do after pre-qualifying?
Build the budget with the builder. Item by item. Do not skip the boring stuff. That is where the truth is.
I liked having that reserve. It made me feel safer.
And that is the right word, safe. This kind of financing should feel stable from the start. If you want help getting the budget right, call 888-857-8041 and let us walk through it before you apply. Here's another big one. People think they can submit a loan with just a rough idea and, fill in the blanks later. That usually slows things down. Appraisers will undervalue your project, causing you to bring tens of thousands of dollars more because of a low appraisal.
That would not fly with a good builder anyway.
Right. We, the lender and appraiser, need the full plans and specs. That means the blueprint, room count, square footage, finish level, materials, and scope of work. If the appraiser and we, the lender, cannot see what is being built, the file just cannot move forward.
I remember the spec sheet being a big deal.
It absolutely is. The plans and specs help us confirm the project, the appraisal, and the draw schedule. If those details do not line up, delays are guaranteed.
That is where people get impatient.
They do, but this is not the place to rush. A good set of plans protects the borrower just as much as the lender. It keeps everyone on the same page before the first nail is driven.
That sounds like fewer surprises later.
Exactly, and fewer surprises mean fewer delays.
This was the part I had the least experience with.
That is normal. A construction loan is different from a simple purchase loan. During the build, funds are released in stages based on progress and inspections. That is called the draw process.
So the builder does not just get the whole loan on day one?
Correct. Money is drawn in stages as work is completed and verified. That keeps the project on track and protects everybody. It also means the borrower needs to understand the timing before closing.
I was glad someone explained that in plain English.
It should always be explained in plain English. If you do not know how draws work, you can get confused when the builder asks for payment or an inspection slows things down.
And then people start thinking something is wrong.
Exactly. Sometimes nothing is wrong. The loan is just following the rules in a process.
That conversion part was important to me. I wanted to know what happened at the end.
And that is one of the best parts of a one-time close loan. Once the home is finished and the required steps are done, the loan moves into the permanent mortgage under the terms set at closing. That is the whole point of the structure.
That felt much more secure than I expected.
That is the goal. And if you want to talk through the draw process before you start, call 888-857-8041. This is the one that surprises people the most. You can get pre-approved, feel good, and then accidentally wreck the file by making a big move before closing.
I almost bought a new truck.
That would have been a problem. New debt, job changes, large account transfers, and other financial changes can all trigger extra review. We, the lender, want a stable picture from start to finish.
So even good changes can cause delays?
Yes, even changes that seem harmless can slow things down if they have to be explained or documented. That is why we tell borrowers to keep life steady until the loan closes.
That is easier when someone tells you why.
Exactly, it is not about control, it is about protecting the approval.
That advice probably saved me from making a huge mistake.
And that is the whole point of getting help early.
What I loved most was the peace of mind. One closing, one path, no guessing.
That is what many borrowers want, and for good reason. One-time close construction loans combine the construction phase and the permanent mortgage into one transaction. That can mean fewer closing costs and fewer moving parts than doing it in two separate steps.
And less chaos.
A lot less. During the build, funds are released as work is completed. In many cases, borrowers make interest-only payments on the amount that has been drawn. Then, when the home is done, the loan transitions into permanent financing.
That was a big comfort to me. It felt stable.
Stable is the word. When people are building a home, they want to know the ground is solid. That is why this loan type works so well for custom builds.
It also helped that I could build the kind of home I actually wanted.
That matters a lot. These loans can work for traditional stick-built homes, timber frame homes, barn dominiums, modular homes, and manufactured homes, depending on the program rules. The right loan should support your dream, not shrink it. If you are thinking about building, do not wait until the last minute to figure out the loan. Get the builder, budget, plans, and file aligned early. That is how you avoid delays and protect the deal.
I can honestly say the smoothest part of my build was working with you guys, a lender who explained things clearly. That made all the difference.
And that is the takeaway. A one-time close construction loan can be a great path forward when the file is set up right. The approval gets easier when the builder is solid, the budget is complete, the plans are clear, the draw process is understood, and your finances stay steady.
If someone is even thinking about building, I would say do not guess. Get the facts first. Call Jake and his team.
Exactly, and if you want to get started the smart way, call 888-857-8041 today. For more helpful videos on how we can help you achieve your dream home, make sure to like, share, and subscribe. Also, put your questions below in the comments section. Don't forget to call us at 888-857-8041. Did you find this video helpful? Like, share, and subscribe for more expert insights on home building, real estate, and financing. Comment below with your questions or experiences with construction loans. Call us at 888-857-8041 or reach out at the links below this video.